Hey, good morning, everybody, and welcome to a daily market report brought to you by Mike Bjork. And today is Thursday, August 18th. We got a lot of economic news releases to go over today, so I'll get right to it. Tomorrow, there's nothing scheduled, so it looks like everything got cram-packed in today. So let's get right to it. We're going to start off today with the jobless claims, the weekly jobless claims. Last week, it looked like it got revised a little bit higher. It was, I think, 395 and got revised to 399 thousand people applying for unemployment. They were estimated about 400,000 and it went up to 408. So, of course, that psychological barrier of under 400,000, of course, was broken. So that's not boding well right now. And the big E right now is the Consumer Price Index. This is the headline one. So the previous month was at minus 0.2%, so it retracted a little bit, which was, we kind of like that a little bit, as long as we don't go to a deflationary level. And then they kind of figured it would go up to about 0.4%, and it actually jumped up to 0.5%. So that's pretty high, kind of scary number there. But let's take a look at the core, which is taking out the food and energy, which creates the volatility. And this is the number that the Fed generally looks at because you're taking out the volatility. The previous month was at 0.3%, and they figured it dipped down to about 0.2%, and that's where it basically came in at 0.2%. So estimates, 0.2% is pretty standard. It's kind of moderate, so it's not like it's jumping up dramatically or anything. So 0.2% is kind of means that it's kind of contained for the moment. So right now, inflation doesn't show, and basically it's not showing any issues right now. So now let's go ahead and take a look at existing home sales. We had 4.84 million, excuse me, previous month, and we figured it would go up a little bit since after all it is summertime, and actually dropped down to 4.67 million. So home sales are actually down. So that's obviously pretty disappointing, and especially when I'm in the mortgage side of my on the mortgage side in real estate business myself, so we can see it firsthand here. Leading indicators. This is an important gauge here to see what we are looking at for future growth, if there's any growth. Previous month they're showing about 0.3%. They figured it would grow at 0.4%, and it went up at 0.5%. So that's not bad actually. Leading indicators is actually showing some positivity right there after all this negative news that we're kind of seeing previously. And then the Philadelphia Fed, this will kind of the manufacturing in the Philadelphia region here, and we had a 3.2, so a real modest number the previous month, and we figured it dropped about 0.5, and it had a sharp downturn of negative 30.7, so that's a huge retraction in the manufacturing section of Philadelphia region. So again, manufacturing looks like it's starting to, they've been kind of supporting us along most of this time here. Now it looks like it's kind of working backwards now. So let's go ahead and take a look at the headline news here. And of course, the stock market's way down. It was at one point like minus. The Dow was down like minus 528. I think as at this time it's about 434, somewhere around there in the low fours. So we'll see if that continues for the day, but that's down quite a bit so far. And a lot of that has to do with what the economic news we're showing, but also big worries on Europe and the banking over there, as well as the rest of the global economy, what's going to happen and stuff. So this big slowdown here. So let's also take a look at the bond market and where interest rates are at. We had a little bit of an increase here, so we saw improvement. We actually had another improvement here, so we had about 13 basis points upwards movement. So we opening it, so we have a little bit of a gap here, which this could get closed. As you saw, we did have a wick going upwards. So with everything going, it's possible a lot of the money looks like it's going more towards in the treasuries than the bond market. So that's why you're not seeing a huge fluctuation in the mortgage-backed securities right here. So anyways, interest rates are a little bit better today. That's the point of this whole video, is interest rates are a little bit better today. If you guys are in the high-cost areas, counties, go ahead and take a look at a post I just made recently on the Mike's dailymarketreport.com. You can take a look at it, and basically it's just kind of illustrating what's going on with the high-cost counties, with the high balance loans that are out there that we're basically coming to an end on the temporary high balance, and basically some banks are actually Now not taking those loan applications, as they're having with the increase in the loan applications for the refinances, is clogging up their systems, and they're not going to be able to get those done in time, because basically they need to have those closed by September 30th, which we're talking now just under 45 days to complete. And some of these banks are now quoting 90-day escrow refinance periods. So uh, if go ahead and take a look at it. If you're caught that, go ahead and give me a ring. If you're in California, we're still getting through these things. So, but I wouldn't wait long. I think if you wait till after September 1st, it's gonna be almost impossible to get done. So then you're gonna be looking at the jumbo loan or jumbo loans. So, anyways, folks, and also if you're a home buyer or looking to refinance, go ahead and stop by CaliforniaMortgageTips.com for more information, some free reports, mortgage calculators, a lot of different great information I think you might like. The NOMI Pay program, which is a loan program that allow with no mortgage insurance, no monthly mortgage insurance. You can put less than 20% down and have no mortgage insurance. So check that out as well. You guys have a great day, and I'll catch you tomorrow.